So moving on to some slides over substantive testing. So as we know, this is our standard slide that just tells us, based on the level of control risk that we wind up with after test of controls, this is going to inform the level of substantive work we do. These are some example substantive analytical procedures that can be performed over AP and accrued expenses. Nothing too crazy here, so I'm not going to spend a ton of time going over it. Things like looking at how payables turnover has changed over time. Other important things would be looking at individual vendors and comparing them year over year. So what you would typically do is something like that, is look at very large vendors, so vendors that comprise a very large percentage of AP. So you could say they're individually significant or material, and if they were there individually significant or material in prior year, you would expect they're also going to be present in current year. So that's often a test we'll do, an analytical test we'll do, but it's also helping us establish completeness, right? Because we're expecting to see the same big vendors kind of year after year after year. It'd be strange to see them suddenly missing from AP. And these are the assertions we want to test. Of course, you see they're more on the balance sheet side, since we're talking about AP and accrued expenses right now, which are liability accounts. Remember that we do test the class of transactions assertions as well when we're thinking about purchases, but those will be more so tested as part of test of controls, with the exception of cutoff, which will be tested at year end. So with respect to existence, our big concern here is that they could have recorded a liability which doesn't actually exist or isn't a valid obligation of the entity. So to test this, we could vouch a sample of items included in the AP listing. So take the AP listing, pick a sample of items, and then vouch them to other supporting documents. So this would be things like the PO, the receiving report, and vendor invoice. And this will help you establish that this is, an actual valid payable that should exist as of the current fiscal year end. All right, rights and obligations, not typically a major concern with respect to AP and accrued expenses, because you wouldn't typically have an incentive to record a liability that wasn't an obligation of the entity. So this is not something where we have a lot of procedures planned around it. In terms of completeness, so for AP, this is where we spend AP and accrued liabilities. This is where we spend most of our time testing, is doing the search for completeness. And we do what is called a search for unrecorded liabilities. And it includes the following steps. So first, we'll ask them what they do to identify unrecorded liabilities as of period end. So kind of what is their cutoff process, and we'll make sure we're testing their controls. Number two, and this is the biggest thing we do, is something called the AP search. And it's AKA search for unrecorded liabilities. So what this consists of is looking at cash disbursements that happen after year end. And then what we do is we kind of vouch those cash disbursements. So look at all the supporting documentation behind those cash disbursements to determine whether the liability that related to that cash disbursement related to the current audit period, right? The fiscal year under audit, or does it relate to the subsequent year? So if I see, remember I'm looking at cash disbursements after year end, so I could be looking at cash disbursements in January of 2020, and my fiscal year under audit would be 12/31/19. Right? So what I'm trying to determine when I look at all the support and backup is, does this bill I'm paying relate to 2019 or 2020? Number 3 is I'll also be looking at files of any unmatched purchase orders, receiving reports and invoices for unrecorded liabilities. So this is something we would actually do, like going around to AP clerks' desks, and you can kind of look in their inboxes, look through their inboxes. And of course, this is happening after year end, right? And so it's sort of similar in concept to number 2. So after year end, I'm looking for bills, basically bills they haven't paid or inventory they received that they haven't paid for. And I'm trying to see if it relates to the past fiscal year. So does it relate to 12/31/19, that fiscal year that I'm trying to audit? And if it relates to that fiscal year, then it should have been accrued for. Basically, a payable should have been accrued. Okay, so the next item up for discussion is AP confirmations. So AP confirmations are pretty interesting and unique because they are not only a test of existence, but they are also a test of completeness. And really, they are more so a test of completeness typically than they are a test of existence. But since they are a confirmation, they are kind of automatically a test of existence, which we've talked about before. Okay, so with an AP confirmation, what we do is we send out, of course, like we always do, a letter to specific vendors, and we ask them to confirm that a particular balance that we have is correct. Now, what makes AP confirmations special is we generally confirm small balances or zero balances. And this is why AP confirmations are also a test of completeness, because the point of us testing small balances or zero balances is we're making sure that these balances are not understated, right? I am testing to make sure that your zero balance in AP for vendor A shouldn't actually be a $20K balance or a $1 million balance. You get the idea, right? I'm making sure it should truly be zero. So again, my concern with AP is understatement, and this is going along with that. So I'm testing for my completeness. Oftentimes, because of this, when I use AP confirmations, I'll often use blank confirmations, which means when we were looking at AR confirmations the other day, we noticed the amount was filled in and the customer had to reply yes or no. So if we use a blank confirmation, it'll actually just say blank, and it will say, hey, can you reply and tell us how much you owe? And then the vendor is the one responsible for filling in that amount with either zero or the small balance or maybe $1 million or whatever the actual balance is. And they're positive, meaning we are asking for a response. Valuation and allocation, right? For actual AP, this typically isn't a huge concern, right? Because there's not a lot of valuation that goes on. It's typically just is what it is, and we record the AP at the amount of the invoice, or we can record it net of cash discount if we're receiving a cash discount. So not terribly complex in terms of the valuation. The book kind of talks about how most short-term accruals are relatively easy to value. I would say sometimes that's true, sometimes that's not. So some short-term accruals, yes, are super easy to value, and you kind of know exactly what the value should be. So something like accrued payroll is very easy to value. But another short-term accrued expense would be like the 1 year accrual of what you think the healthcare expense is going to be. And that tends to be much more difficult to value, right? Because it just depends on what claims are going to be. I mean, you generally go up historically what they typically are in a year, but it depends. The 1 year warranty accrual also can be really difficult, right? And it can totally depend on whether you have one of the products you've sold can break down out of the blue, right? You can have one of Samsung's exploding battery incidents, and all of a sudden your warranty related expense has gone through the roof. So short-term accruals aren't necessarily always easy to value, but a lot of them are. Some issues of classification, presentation, disclosure. We see here there's material debits in AP. We want to reclassify those as AR. Again, we saw the exact opposite when we were looking at the AR side. They have to reclassify material credits to AP. We want to make sure short-term and long-term are segregated, and remember your greater than 1 year, less than 1 year rule. And ensure different types of payables are properly classified. So we have, the whole trade AP versus other types of payables, notes payable, etc. And these are some disclosure items for the presentation and disclosure assertion. So these are things we typically would need to disclose in our footnotes. So things like segment reporting, if we have any long-term purchase commitments, things like that, those need to be disclosed. So this is just saying to keep all those in mind. So we just went down the list of substantive procedures to test AP and accrued expenses. So those are substantive procedures related to management's assertions for account balances as of period end. But we also have all the substantive procedures over class of transactions for purchases. However, basically all of those will be tested in conjunction with test of controls apart from cutoff, right? And this is exactly the same as what we talked about happens with the revenues process, right? So all of those are being tested along with TOC apart from cutoff. So that's the same thing that's happening here. Very similarly to in revenues, when we're testing purchase cutoff, basically we're just looking at the last week or two of the year and the first week or two of the following year to make sure things are being properly classified in the appropriate period. And so oftentimes with purchase cutoff, we'll be looking at the company's year-end inventory count, and we'll make sure basically that everything that is included in inventory as of 12/31, all those things are obviously physically there, right? So those purchases should be included on the books. But we also would want to consider any purchases that had been made, right, at FOB shipping point that had been purchased but that had not yet arrived. Yeah, so we may see purchases in our AP search where the cash goes out the door in January because that's when we actually received the goods, when we were actually invoiced, but technically these goods were shipped in December and they were shipped FOB shipping point. So technically we owned these things and we owed the money, right, at AP as of 12/31. So that's what should also be considered when you're testing cutoff. So the other thing that the AP search is testing, as well as completeness, is cutoff. So cutoff gets tested in conjunction with physical inventory count, also gets tested with that AP search. Okay, and of course, at the end of all these procedures, we're going to evaluate our audit findings. If we have any misstatements, we're going to look at them in the aggregate, and we're going to compare those aggregated misstatements to our tolerable misstatement for the account to see if we think the account is fairly presented or not.